All right, let's check in now with eNCA Money Desk. Devan Murugan is standing by. So, Devan, of course, the President was pushed on what his stance was regarding the use of pension funds for developmental projects.
Yes, indeed. It came out in the National Assembly today. It's an ANC policy proposal on the use of prescribed assets, Shahan, and essentially it will force local pension and asset funds to invest in state-owned companies or infrastructure for developmental purposes, and could include ESCOM, for example. Now, currently, there are no rules about which bonds or companies one's asset manager has to choose. It got a few quarters nervous at the moment, and this is what the President said when he was pushed on whether or not he supports the proposal.
We are faced with a situation where our financial resources have been depleted, and we are facing a situation where our developmental needs are enormous. And in a number of other places, pension funds funding is utilized for developmental purposes, for infrastructure, and quite often those pension funds make good returns out of infrastructure development. So I am saying now that let's have that discussion. Let it be a national discussion.
And we'll explore that a bit more with our viewer Mtila in a moment. But let's talk about this. Mr. Price shares down 13%, an indicator, you say, of the weak economy today.
Indeed. I mean, it's a huge retailer, so we take a close look at it. An important budget retailer. As I said, it's huge in size. Its share price, Mr. Price, that is, tumbling by more than 13% today. This after the firm reported a slowdown in sales in the first 4 months of its financial year. It cited a slow economy and a squeezed consumer. And again, Shahan, it shows South Africa's economic troubles continue to filter into the trading environment for retailers like Mr. Price. Earlier this week, you would remember, we saw how the weak trading environment also weighed on ShopRite's results, Shahan.
So where does that actually leave the local market today then?
Yeah, it did weigh on the local market, 0.75% in the red. In fact, when we bring up that board, you'll see it's just slightly more than that, about 0.8%. Mr. Price contributing quite a bit to that poor showing, pulling other retailers down. But there were broad-based losses today, with the banks also in the red. Financials down just under 1% as well. On the commodities front, the price of gold remains steady, but it has fallen below that $1,500 level momentarily, but back up as investors opened up to riskier assets. Brent crude oil, as you can see, back below that $60 mark on the back of slightly lower U.S. inventories. So the rand, what's the performance of the local currency? Well, it's about the same levels as we saw yesterday. Well, 15.20 now compared to yesterday's 15.37. So some movement. Remember that what's happening with the rand is that the marketers are pricing in interest rate cuts in the U.S. So when that gets more likely, the rand does tend to strengthen. It also benefited from inflation data out yesterday, which showed inflation is now at about 4%. So to the dollar, 15.20, 16.86 for a euro, and 18 rand 63 cents for a British pound.